and then selling. He or she can provide some creative solutions to give you options based on your financial landscape. So this is a perfect segue to introduce Matt Boyce. Matt, are you here?
I'm here.
All right. So Matt Boyce is the Executive Vice President of Garden State Home Loans, and he's going to discuss some options with you. So take it away, Matt.
How's everybody doing today? I guess everyone's probably on mute, right, Kara?
Yes. Yeah, everyone's on mute. We're talking on the chat box, but it seems like everyone's great. I'll answer for you.
You would think after how many years now of Zooms, and having to do these, I would be used to it.
Yeah, right.
So just give me a little idea of where we left off. I know you were just talking about all the options and as a seller, how to prepare yourself to buy, correct?
Yeah, so we basically just came from a slide where we were talking about whether they have to sell first or buy first. We talked a little bit about the rent back, but sometimes there is an option for you if you do feel like you are going to be.
Gotcha. Okay. So the biggest thing that you can do, and I always start off with this, because the number one thing you have to know are your numbers, right? So getting pre-approved. I think that's the biggest thing people are worried about. They're a little unsure what that really means. They're unsure of the process, and rightfully so. Every lender has a different process and a different way they pre-approve people, and so we like to take a little different approach to it, where we're not just pre-approving people, we're pre-underwriting you. And what does that mean? So if you're a seller and your end goal is to buy, you need to know the numbers. Now, Kara's going to be able to give you a really good gauge of how much money you're looking to net from the sale of your property. And listen, these days, I'm sure you went over it, we don't even know. I mean, it used to be, well, we know the comps are this. So between, this narrow range, we could hope your house will sell for. And with how many buyers, one of our buyers just won out a bid. They were 1 out of 40 offers, 1 out of 40. And so they, but they ended up going, 50,000 over or 20,000 over 10. It really depends on a lot of factors, but Kara's going to be able to give you better than Zillow or any estimates online, a really good understanding, a conservative estimate of how much you're gonna net from the sale of your home. So that's a really important number, because that, along with your savings and any other liquidity that you have, that is really what's going to make you the stronger buyer. And then that's also going to do another thing where I want you guys to remember CIA. That's what matters when you're buying a home, the CIA, which stands for credit, income, and assets. Credit, income, assets. So credit, if anybody in here thinks that their credit needs to be improved upon, contact me right away. I will do a thorough analysis of where you stand on your credit, and I'll give you a real life view and real life tips on how to get the credit scores up, because I think that's a rabbit hole that everybody can go down and you get lost. So 20 years of dealing with credit, I'll give you some real advice on how to fix it. Income is the next thing, where and we'll get to assets in a second. We were just talking about it, but with income, everything is all gauged on your income. How much are you going to qualify for in the next when you go to buy? So we need to do a thorough analysis of your income. If you're self-employed, if you're variable income, there's equations that we have to do that are far more complicated than you can imagine. And if you don't do the right analysis of your income, you're going to really put yourself at a disadvantage, because you might be handicapping yourself when you do look to buy. So we need to make sure the income's there. And then finally, as we were picking up again on assets, how much are you netting from the house? How much do you have saved? And then, of course, equity lines and other things that we need to talk about. Once we know all these variables, then we can come up with our game plan. So, and here I'm trying to say, people are asking, Angela, selling this year, moving to Florida. My son and daughter-in-law moved here. Could I get the slides? Oh, sorry. You're talking to Kara. So any questions, guys, just ask, because I'll see them on the bottom of the screen. So now that you know CIA, we need to figure out your debt to income ratio. And that is what's going to tell us if you're contingent or not. Kara, did you go over contingencies?
A little bit, yes.
So how do you become the strongest buyer possible when you're looking in this market? And it's waiving as many of these contingencies as possible. So you need to be non-contingent in the strongest sense in order to put an offer in and get your offer accepted by that seller. Because think about it, if you're a seller, what's important to you? If you have 10 offers, let alone 30 or 40, if you have 10 offers, what are you looking for? How are you going to become the strongest buyer possible? Well, having as much assets possible is really going to free you up, because then you could do things like, I'm willing to pay a certain amount over an appraised value. Kara, did you go over that?
Oops, we did not get there yet. That was going to be the next slide, is the appraisal.
Okay. So really and I don't want to overstep your slides too. And I don't want to go on and on about all the variables when it comes to
Matt, you there?
yeah,
Are you there?
I'm muted.
Oh, what happened?
Okay. Now you're
You left for a minute.
sorry guys, I got muted. So I just want to make this concise. I know you guys have been on this, and I don't want to give you information that's going to confuse you. So CIA, credit income assets, we know that now. So how are you going to become the strongest buyer possible moving forward? You need to go into this thinking you want to be non-contingent, which means you make enough money to carry both mortgages. Okay. So you have your mortgage, including taxes, insurance, all that good stuff. You have car payments, you have minimum payments on your credit card. Those are all your existing expenses. Then you need to add to it the new mortgage payment, including taxes, insurance for that property. Add all those expenses up and divide it by your monthly income, and that gives you your debt to income ratio. And so the rule of thumb is you want to be a 50-50 split. You want your expenses to be less than 50% of your income. And so if you're doing that in your head and you're going, I easily think I can do that, you are a non-contingent buyer, meaning Kara can put in an offer on your behalf saying they are not contingent on selling their home. So that's a really big point to get to, of being non-contingent based on income. But then you might be saying, well, hold on a second. Yeah, income's fine, but I don't have the assets to put, 20% or a good amount, a good portion down. So that's where, and I think, Carrie, you and I were talking before, we discussed equity lines. We discussed other ways of bridging the gap between you putting that offer in and selling the house, where you're going to get all that money. Right, Kara?
Yep.
So then if you guys think you're going to be buying in the next year, 2 years, whatever it is, I highly recommend you get a home equity line of credit. And a home equity line of credit lets you tap into your equity earlier, where you can actually use that for a down payment on your new property. So equity lines are cheap. I think they're less than $500 these days to take out. I have banks that I really like. We don't offer them. So based on where you are, I would recommend the bank, or if you have a relationship with your own bank. But an equity line of credit's another way of giving you the A and the CIA, the assets part. So that's what goes into our analysis when we sit down with a new buyer. We want to go through all these variables, and based on it, we'll guide you through the next steps of your options. And then you can choose what you're most comfortable with. But I'm just telling you right now, and I don't want to sugarcoat anything. When you're going into the market, you have the advantage as a seller, and Kara can go over all of those advantages. But then as you go into it as a buyer, that's your disadvantage. So it evens out. Well, how do we make you the strongest buyer possible? We evaluate, are you contingent or not on selling? And then if you don't have the assets, we can come up with other options as well. So Kara, why don't you can move on to appraisal, and if you need me to chime in anything or anybody has any questions, I can answer those right now.